Churchill Capital's CCIV stock saw some very wild volatility during trading hours on Monday, even reaching a point where trading had to be halted. The stock has been increasing in volume each day as rumors continue to spread, saying that they will merge with the new electric vehicle company, Lucid Motors. So what exactly has been happening with the stock? Should we be buying or selling our positions in it? In today's video, we'll be going over what may have been the cause for the wild CCIV swing and whether or not you should add to your positions in wake of some major upcoming catalysts. So let's get started. Hello everyone, this is Mark with MC Stocks. Remember to subscribe and hit the like button for more videos like this one. And as always, remember to do your own due diligence when investing and seek a financial advisor for professional advice. So Churchill Capital's SPAC, CCIV, is one of the hottest stocks on the market with a current volume of about 116 million. This is because of circulating rumors that CCIV is in talks with electric vehicle company Lucid Motors for a merger deal. There is very strong evidence supporting the possibility of the merger, including the Lucid chairman of the board of directors, Andrew Leveris, also being an operating partner in CCIV, Saudi Arabia's public investment fund being a heavy investor in Lucid and previous dealer with Churchill Capital, and Churchill Capital CEO Michael Klein having directly completed deals with both Andrew Leveris and the public investment fund. With all of this information, the likelihood for a merger between Lucid and CCIV seems all the more probable, and the CCIV stock price has reflected that. We can see that over just the past month, the stock price has gone up almost 150%. However, on today's stock chart, we can see some heavy volatility. CCIV stock started out Monday opening with about 16%. CCIV stock started out Monday opening with about a 16% gap up in the green. Later on though, we can see a very sharp dip where the stock took a plunge, going down about 20% in minutes. Even then, the stock swiftly recovered and eventually closed out the trading hours back in the green at over 11% up. So what caused this wild roller coaster ride? Let's go chronologically. We can reason the opening gap up due to a few reasons. First, it could simply have been just a continuation of the surge we saw on Friday, where the stock skyrocketed over 25%. It also could have been due to the expectations of a Lucid CCIV merger announcement to occur during the pre-market or early opening hours, given the Merger Monday precedent. If you're not familiar, Merger Monday refers to the practice by companies of announcing major mergers and acquisitions on a Monday. Although it is not a requirement for companies to announce mergers on Mondays, it has proven to be one of the more likely days they do end up making the announcement. According to the Corporate Finance Institute, 30% of mergers were announced on a Monday in 2019, beating the flat 20% odds of any other day of the trading week. So with this positive sentiment, the very green start for CCIV was not too surprising. But then comes the sudden dip that took all those gains and more away. What could have possibly been said to have caused the stock to go 30% down from its highs in a matter of minutes? One could argue that CCIV stock was simply following the day's market indexes. Looking at the Dow, Nasdaq, and S&P 500, we can see very similar dips around the same time frame, despite not being as large of a swing. However, there was no pressing news that would have caused all of the market to drop this sudden like we saw at the start of the pandemic. We could speculate that it was caused by large institutions who hold many thousands to millions of shares deciding to sell off their shares at once, causing this cliff-like drop. But then, why would CCIV see a much steeper drop? Let's look at this article that was published right before the stock drop at 10:21 Eastern Time. This article, published by WCCF Tech, claims that there may be a delay in the Lucid CCIV merger announcement due to the plans of building a Lucid factory in Saudi Arabia. The headline alone could have put current investors and institutions in a panic. A quick sell-off then resulted, possibly due to fear of not seeing high-yielding returns immediately. And because it was such a quick sell-off, trading had to be halted. So that may explain the falling price. But what about the swift recovery up? This trading halt may have luckily given investors and institutions enough time to read and analyze the article and reevaluate their sells. Upon closer inspection, we could see that the article is actually expecting a merger between Lucid and CCIV to occur. Very positive news supporting the merger theory. The author is simply providing their opinion, stating that the negotiations on the Saudi Arabian Lucid factory may need to be finalized first before a merger between Lucid and CCIV can occur. The author goes further on to state that a delay could be good news for the long term, so that the parties can enhance their due diligence, boosting confidence in the viability of an eventual merger agreement. Furthermore, let's look at some of the large CCIV purchases made right around the bottom of CCIV's stock price. According to Twitter account Trading with Alerts, we can see these two massive purchases made, taking advantage of the dip. The first was a huge $12 million order at 11:09 Eastern for $21 a share. Then a second $22 million order at 11:15 Eastern for $19.84 a share. Combined, almost 1.75 million shares were bought in a matter of minutes. After these purchases, and the probable return of individual investors buying back shares, CCIV stock recovered back into the green, closing out the day up about 11%. This swing indicates a fear in CCIV stock by the common investor and a thirst by larger institutions to snatch up the stock at the sight of a sale. Despite no real news being released, and nothing fundamentally changing about Lucid or CCIV, the stock plunged almost purely out of fear. So, with all of the day's events in the stock explained, how does CCIV project for the next coming days? CCIV's bull run may continue in the coming days, especially with the big upcoming catalyst coming up on the 27th and 28th of January, Saudi Arabia's annual Future Investment Initiative Conference. This conference is Saudi Arabia's annual tech and innovation conference, where major projects and investment announcements are presented. They could boast all of the features in the new Lucid Air EV, highlight the new Arizona factory built, reveal news about the Saudi Arabian factory, or even announce the Lucid CCIV merger. With such a huge event coming up, CCIV stock may continue to grow, especially as the hype builds up. Do take caution though, that this may result in the 2020 trend of buying the hype and selling the news. The stock price may increase in the coming few days, but after the event, depending on what was announced, we may see an immediate sell-off or a sell-off after a big buy-in after the news release. But with all of the rumors circulating, evidence found, and great product being produced, there is little reason to think the company overall is not worth keeping in your portfolio. Remember to only invest what money you are willing to risk, and to do your own due diligence when buying and selling your stocks. If you have not yet bought shares of CCIV and are looking for a brokerage, be sure to use our referral links in the description below. M1 Finance is doing a great offer currently, where you could get a free $30 using a referral link. So use the link below, earn an easy $30, and don't miss out. Good luck everyone with your holdings, and stay tuned on our channel for any news regarding this Lucid CCIV merger. Thank you for watching today's video. Don't forget to subscribe and hit the notification bell to get notified when we release our next video. Please like and share for more videos similar to this one, and comment below with any questions that you may have so that we can address them in future videos. Thanks.